Welcome. Hope you're safe and healthy. I'm Rob Booker here for Wealth Press. Listen, there's a ton of great stuff to get to today in the midst of all of this negativity and everything that's going on around the world. There are so many opportunities right now, and we all just want you to know that we care about how you're doing, and we hope you're doing well. And today we're going to take a look at the retail industry. I think there are some hidden signs of positivity in a giant ocean of negativity that's going on right now. If you look at the retail sales reports that are coming out, food and beverage is up. That's the area of positivity. But if you look at clothing and accessories, way down, way down. And maybe we'll look at a company or two there that might be some of the ones that don't do very well. Gas stations way down, sporting goods way down, car sales way down. Food service, just so many problems right now. So what are going to be the winners in the midst of what is basically the biggest retail sales implosion of all time? More jobs have been lost in the last 3 weeks than were created in the last 12 years. That's going to send demand down. And when you have a demand recession, a demand-based recession, that means that people don't want goods and services, especially higher priced goods and services. When you have a demand recession, then retail gets hit really, really bad. And so are there some signs of positivity anywhere? And the answer to that is absolutely yes. I would not be surprised to see that Walmart becomes the biggest winner of 2020. Like in the stock, it would not surprise me to see Walmart. And at any chance I get, if I get any chance at all and see Walmart maybe correct on, a temporary negative report or something along those lines, I would love to get my hands on some of that. The trend line is up, the trend is up, the momentum trade is up, and my price target for Walmart would be something in the neighborhood of $160 in 2020. Food, household staples, cleaning supplies, the demand for these types of things is not going to go away. And any of the businesses in your country that sell those types of things are going to do well. And if you think even after some of the restrictions on movement are lifted and whatever else, people are going to stock up, right? That's going to be the name of the game. People are never going to find themselves without toilet paper again. So who else does well? I guess you could probably look at, I get a lot of people asking, what about Kimberly-Clark? What about the toilet paper manufacturers? They've done well. Even in the midst of a little bit of a recovery in the stock market, you can see companies like this have outperformed. However, I don't know if that's a diverse enough company. I don't know if that's a stock that has enough exposure to lots of different things to do well. Amazon's really expensive, right? Amazon is, of course, doing great. Amazon is, this is almost too hard to believe, right? Amazon is crushing it right now. And there's probably no end in sight to this. You think about the cash position that Amazon has. The market cap is $1.2 trillion market cap. $1.2 trillion. So it would not surprise me to see Amazon reach out and buy other companies. It would not surprise me in the least. Now, I've got a company out there that I don't like so much on its own, like Chewy. It's, we've been down this road. I take a lot of flack for hating on this company. We have dogs. I love the dogs. Right, Isaac? You have dogs. You love the dogs. You got a brand new dog, Dante. Listen, I love the animals, but Chewy is worth, it's probably worth $10 billion as a company at the most, if you multiply its current sales by a bajillion. Their market cap right now is probably $14 billion. It would not surprise me to see Amazon, like everybody at Amazon, go out in the executive offices, pull up the couch cushions in the executive suites and find all the pennies and stuff in there, and they come up with $10 billion in change in between the couch cushions at Amazon, and they buy Chewy. It would not surprise me at all. It would not shock me to see Amazon go on a shopping spree to buy retail outlets that are failing. It would not surprise me to see Amazon, I don't even know if Children's Place has any assets worth buying, but they've gotten absolutely annihilated in the retail sector lately. So what about Abercrombie and Fitch? Somebody asked me about this Abercrombie and Fitch, ANF. So look at this. So this is another one. What's the market cap? 622 million. So Jeff Bezos could, I don't know, like he could, I don't know, he could mortgage one of the bedrooms in his home, and he could get a line of credit against one share of his stock, and he could buy this company as an after that. He could wake up in the middle of the night and scream out the words Abercrombie and Fitch, and then wake up the next morning and someone thought he said buy them, and it wouldn't make any difference. Like, think of it. A $1.2 trillion company can easily buy a $622 million company. They could buy that company, 1,000 times over or some crazy, it's not 1,000 times. It's like they could buy it over and over and over again. Right now, ANF is in a downward trend. It got a spike up. It wouldn't surprise me to see a deep, deep drop. If the malls don't open, if people don't go back to the mall, if people don't start spending money, this is one of those companies that's going to have a really, really hard time recovering. But the winner is, once again, like I said, the winner is Amazon. The only reason I don't go out there and say, listen, I think Amazon's a great buy is because it's just too expensive. Right? It's just so no one's going to go buy multiple shares, even buying options on this. So check out some of the stuff at Wealth Press. We can even put some links down below on some ways that you can spend less money to buy more shares of this. But my price target for Amazon in 2020, let's talk about that for a minute. As the world's largest, most successful retailer, we have now new support at what used to be resistance at $2,200. If we drop to that level, it's a retracement in the midst of an upward trend. We are so overbought now that a retracement is almost 100% guaranteed. It's almost 100% guaranteed. This has to come back eventually. We'll look at the historical likelihood of the RSI staying up that high for that long. However, price target on Amazon, $3,000. They're going to report blockbuster earnings. They're a well-run company with tons of assets, tons of cash. They can go on a spending spree to increase their customer base. And then they've got Amazon Web Services, which in the midst of all of this is probably still just crushing it. So let's go back on the 4-hour chart and see, when's the last time Amazon did this well for this long? Let's see, the last time we got as high as 86 on the relative strength index, set to 14 on the 4-hour chart. So we got up there back in January of 2018. It went even higher at that point and then created some divergence. So price went higher. So you can see here, we'll draw this on the screen. So price made a high at $1,300 or so dollars. Then price went up, but the relative strength index fell, and it got to 1475. These are all rough numbers. And then it dropped from there. So that's what Amazon's probably going to do. It's going to have like I said, like a 100% guaranteed bit of a retracement, then possibly a shot even higher, and then a deeper retracement before it continues on upward. That pattern is so likely. You could probably overlay that right on top of what's happening right now, and it would not surprise me to see that exact thing happen all over again. I don't know the last time besides that. I mean, it was briefly super overbought in April of 2017. Once again, if it gets to 85 or 86 on the relative strength index, it's gonna pull back. That's it. It's like physics. It's like market physics. It's like if you, there you go. It went above 85, 86 on the relative strength index in April of 2015. Guaranteed. It's going to drop back to that monthly or weekly pivot level. And the May pivot on Amazon's probably going to be somewhere around $22, $2300 a share, unless it pulls back a bit, in which case it'll be a little bit lower. And I think you just gotta look for Amazon to pull back a bit, even though it's probably going to be the world's most profitable. No, I mean, it's going to produce more revenue than any other company in the world. As far as retail goes, those are my thoughts right now. We can do another video later on Apple. I'm not really I'm not really that much of an expert on Apple except when it comes to buying every single product that they release. I hope you're well. Most importantly, hope you're happy and safe and healthy right now. Everyone here at Wealth Press, we care about you and care about how you're doing, and we wish you all the best right now. I'm Rob Booker, and I'll see you soon.